URJPY, GBPJPY, AUDJPY, Dow Jones, and gold reached their convergence points. Congratulations to those who were able to secure profits. Now, let's take a look at the financial market outlook for the week of April 13th through 17th, 2026. How will the markets move this week? Let's take a closer look. This week's theme is the true nature of Iran's Revolutionary Guard Corps. Iran remains the central focus of global markets this week. Before we begin, a quick note on the model. This forecast uses 200 weeks of global market data and AI-assisted statistical analysis. It does not predict geopolitics, only where prices tend to converge over time. Based on these statistical dynamics, here are the projected convergence levels for this week. USD JPY is 159 yen and 65 sen. EUR JPY is 186 yen and 48 sen. AUD JPY is 111 yen and 58 sen. GBP JPY is 213 yen and 28 sen. The Nikkei 225 is 53,645 yen. The Dow Jones is $48,263. 10-year JGB yield is 2.27%. Gold is $4,828. These are statistical convergence zones, not directional forecasts. Last week on this channel, we stated that a ceasefire would likely take about 2 weeks, after which the conflict would shift into a war on terror against the Iranian Revolutionary Guard Corps and Hezbollah. And in fact, through Pakistan's mediation, the United States and Iran temporarily agreed to a 2-week bilateral ceasefire. In response, crude oil prices fell, and stock markets rallied. However, just 2 hours after the ceasefire began, Iran's Revolutionary Guard launched attacks on Gulf states, including the UAE. Soon after that, Israel launched a large-scale assault against Hezbollah forces in Lebanon. In retaliation, the Revolutionary Guard announced the closure of the Strait of Hormuz. Even now, sporadic attacks continue between Iran and Israel. Meanwhile, the United States is maintaining its ceasefire posture with Iran. Washington has made clear that Israel's military action in Lebanon is not covered under the ceasefire terms. On the other hand, Iran's blockade of the Strait of Hormuz is being regarded as a clear violation of the ceasefire, making it increasingly difficult for negotiations to continue after the start of next week. What deserves close attention here is the role of the Iranian Revolutionary Guard Corps. The IRGC is a massive state corporate hybrid empire generating profits equivalent to roughly 50% of Iran's GDP. Oil, finance, logistics, construction. It controls nearly every major industry, effectively operating as the true engine of the Iranian state. Neither the president, nor even Iran's regular military, can restrain its actions. The reasons why the United States has designated the Revolutionary Guard as a terrorist organization are as follows. According to reports from the U.S. Drug Enforcement Administration (DEA), the IRGC has used Hezbollah networks to traffic Venezuelan cocaine to European mafias, using the proceeds to fund terrorism. Furthermore, in January this year, the IRGC was also reported to have opened fire on anti-government demonstrators, carrying out executions and mass killings in a scale described as genocide. This is no longer simply about Islamic ideological doctrine, it is a system of violent rule designed to preserve power and economic privilege. However, in this conflict, U.S. strikes against Iran have severely weakened the IRGC's retaliatory capabilities. The next critical turning point will come if reopening the Strait of Hormuz becomes impossible. In that case, the United States may move toward a scenario involving seizure of Karg Island, the financial lifeline of the IRGC, as well as Iranian-held islands along the Strait of Hormuz. Last week, President Trump stated we need about 2 more weeks to end this war. If that timeline holds, the week of April 13th could become the final decisive phase of this war. And after that, as we have noted before, the conflict will shift from conventional interstate war to a broader war on terror. The battlefield will enter an entirely new phase. Financial markets have already begun pricing in that continuation of a U.S. favorable outcome. Equity markets remain resilient. WTI crude briefly surged above $110 per barrel, but has now fallen back toward the $90 range. That said, this week requires caution. A sudden U.S. military operation such as a ground invasion cannot be ruled out. If that happens, financial market volatility will spike sharply. And finally, the dollar-yen exchange rate. If USD/JPY rapidly moves toward 160 yen, the likelihood of direct currency intervention by the Japanese government and the Bank of Japan will become extremely high. At present, USD/JPY is showing a very strong correlation with crude oil prices. In the coming trades, investors must watch not only global interest rates, but also the direction of oil prices very closely. Please note that the market outlook presented here is estimated using a stable convergence model based on statistical analysis. We accept no responsibility for any investment results derived from this forecast. That concludes this week's Global Financial Market Weekly Outlook. Thank you very much for watching until the end.